is not celebrating the birthday of the bull market?
Who's that? Peter Schiff.
Mr. Peter Schiff, president of Euro-Pacific Capital. Peter, you don't have your party hat on. You're not going to light any candles for Mr. Bull Market here. What are you doing? Buying more gold?
Well, you have to put the rally in this perspective. I mean, even though we've had a 60% rally in the Dow off the lows, the market's still off 25% from its peak. It's still below where it was 10 years ago. And if you measure the rally of the U.S. stock market in versus other assets, the rally versus gold, the stock market's up less than 20% in terms of gold. And the markets that I am involved in, all the other markets around the world are doing much better. I know the Hang Seng, for example, is up better than 90% in the same period that the Dow is up 60%, so that's 50% better performance in Hong Kong. But the same is true for index all around the world. I mean, the U.S. stock market is the laggard. And I heard you mention earlier in the program that the economy is in better shape now than it was a year ago. It's in much worse shape. The things that the Federal Reserve and that the government have done over the last year, we're in much worse shape today, financially, economically, than we were a year ago.
How do you think we're in worse shape financially? I mean, you have to look at all the equity that the banks have raised. Clearly, that puts them in better financial shape.
Well, the banks might be in better shape, but the nation isn't, because the banks have simply shifted a lot of their liabilities onto the Federal Reserve, onto the American taxpayer. That hasn't helped the country. Plus, I still think a lot of the assets on the books of the banks are phony. I don't think the accounting is real, based on the new accounting laws. And I think real estate prices are still artificially inflated based on lax lending standards and low interest rates and government support. So I think there's still a lot of problems on the books of these banks. I think when they fail again, the next time there's a bailout, it's going to have to be bigger than the last one.
Peter, but does that necessarily mean, if you believe that the banks are cooking their books, or they have phony numbers or whatnot, that doesn't necessarily mean the stocks are going to go down, or are you in the camp that you feel so passionately about this that you do see the banks going down, and so therefore they are short in your book?
Well, look, I don't own any banks. I think you're a sucker to buy these banks. Companies, these banks are good to work in. Certainly, if you can get a job at Goldman Sachs, go for it. But I wouldn't want to own the stock. You're going to get screwed.
Hey guys, it's Charlie. There's a little taste of what Peter Schiff went through today when he went on Fast Money. I'll put the entire video in the more info area. And to be honest with you, I don't even know why he goes on to Fast Money, because they just ridicule, make fun of, roll their eyes, and snicker about him after he's off the air. I guess the one thing that it does is it gives him plenty of ammunition for the next Peter Schiff was right video. And I don't think we're too far away from Volume 3 from coming out. But it's amazing to me. It's absolutely amazing to me when I listen to the news today. First thing I hear this morning is how 14% more people tuned in to the Academy Awards, how auto sales are up, everything's coming back to normal. And it goes to show you what total government control, I shouldn't say total, a large percentage of government control over the media can achieve. And for those of you who don't know what I'm talking about, I just want to inform you that MSNBC, CNBC, where you just saw Fast Money, NBC, and a multitude of other broadcast entities are owned by General Electric. Yeah, General Electric, who received upwards of $140 billion in bailout money and guarantees. They stand to profit from just about every piece of agenda that's coming down the pike, to include healthcare as well. So it's no wonder that these day traders on CNBC are going to be cheerleaders for the true powers in the Federal Reserve and on Wall Street, because their jobs are to promote the companies they work for. Now, they might get up there and tell you, they might be offended if I ask them one of that, but I don't really care, because the proof is in the pudding. You don't have to be a rocket scientist to figure out that nothing is changed. The values of these companies is no better than it was in 2008. Yes, the government has given them free money and allowed them to turn around and park it right at the Federal Reserve and earn guaranteed interest rates with no risk. And they've also backed all these companies' debts, like GE's, to the tune of $140 billion. So on paper, they can say it's, everything's fine, it's fixed up. They also don't have to account for their assets, their troubled assets, in the way they used to. They can market to model instead of marking it to market. Now, I know I talk to people all over this country who tell me the same thing. Property values are plummeting in every area of this country. So these mark-to-model jokes that are going on with these banks is an accounting trick. If you had to market, these companies would be bankrupt. If you took away the free money from the Federal Reserve, these companies would be bankrupt. You know, and here we have just a handful of banks now controlling over $400 trillion. I'll attach the article with this video in derivatives that are holding the nation hostage. They can go to the government anytime they want and say, fix it or else. We've had it happen before. It's proven. We're sheep. We're going to do what we're told. So it's not awfully surprising when you see these plastic cheerleaders start rolling their eyes and asking ridiculous questions of Peter Schiff. I don't know what the lady's name is, but when she's asking, look at the banks, look how healthy they are. They've generated all this equity, and I wanted to scream. What equity? What equity have they created? Is it mom and pop putting their savings into the stock of these financial institutions? Hell no, it's absolutely not. It can be proven that the money markets is not where the increase is coming in the stock market. You know, there's credible evidence that there's over $600 billion that's been pumped in from mysterious sources to get the equity markets on track. In a nutshell, these giant financial institutions are handing out free money to all kinds of hedge funds so they can turn around and buy the stock of the same company that just gave them the money, and it's a Ponzi scheme. We're in the middle of it. We're in the middle of the world's largest Ponzi scheme. But as long as more people are tuning in to the Academy Awards, and as long as more people think it's the right time to go buy yourself a General Motors car, or it's the right time to take advantage of the tax credit on buying a new home before it runs out, then everything will just remain papered over and ignored until the next series of Peter Schiff videos come out. At any rate, I'll attach the stories in the more info area, but for now, that's all I got.